Okay, imagine this. You got an idea for a great tech startup and you think it's going to change the world, but you have a problem. You just don't have the engineers that you need to make it come true. Why? Well, it's obvious. It's hard to find engineers. There's a lot of competition, and when you're trying to keep your burn rate low, you need to conserve cash. Now, imagine you had a partner who could provide you with almost 500,000 on demand developers right away. Now, this isn't another outsourced agency. They'll actually add engineers directly to your team and even relocate top talent to Canada for you. Let me introduce you to VanHack. Startups of all sizes choose VanHack because they only offer handpicked developers with 3 or more years of experience and who have strong portfolios. Great Canadian tech startups like Neo Financial, Fair, Wattpad, Applyboard, and League have worked with VanHack and they had amazing experiences. Go to vanhack.com and check out their talent pool without having to log in and see for yourself. And when you sign up, tell them Evan from The Hard Part sent you for a 25% discount. Float is complete business finance for Canadian companies. They offer modern financial services, powerful software, and industry-leading support designed for every industry and stage of growth. Their integrated suite of products, including corporate cards, FX, bill pay, expense management, and high-yield accounts, gives finance teams everything needed to manage spending and cash flow efficiently so they can help pace with the demands of their business. I'm a huge fan of Float, and almost every founder and investor I meet with in Canada, when we go out somewhere, whips out their Float card, and the team is constantly shipping, and I'm hugely impressed and have been tracking their journey since the beginning. To learn more, visit floatfinancial.com. Just because the economy is uncertain doesn't mean your shred claim has to be. Bloom is all about predictable value. They're the only shred firm that guarantees their work. They meet with you every quarter and show you exactly how much you've accrued. And their pricing is posted online with a cap, so you know what to expect. No guessing, no surprises. Head to shred.ca and see why more Canadian innovators are choosing Bloom as their shred partner. Hello, everyone, and welcome to The Hard Part. The Hard Part is focused on interviewing Canadians in tech, regardless of where they are, whether they're based in Canada, the US, or anywhere else. We dive into the stories, the tactics, trying to get into the meat of what's behind companies, venture firms, operators, and more. We really try to shine a light on Canadian tech. The stories are undertold versus our American counterparts, and sharing these stories is incredibly important to inspire the next generation of builders. Sure, I'd love to start with just like your Canadian roots. Like, obviously, this is Canadian tech podcast, so like, just want to like, what's your story? Like, you're born in Canada, just I'd love to dive into that.
Is this really a Canadian podcast? I didn't know that. No,
Yeah,
I'm just kidding. Yeah, so I'm originally from Winnipeg, Manitoba. So that's where I was born, and then moved to Grand Rapids, Michigan when I was 9. So Michigan's like the closest state. Maybe you could argue like Minnesota or something, but it's like, it's pretty high on the list of states that touch Canada. And yeah, so I mean, every time people ask the story, I always start. I'm from Winnipeg, Manitoba. Like, that's the first. That's really the roots in the story. Still cheer for the Winnipeg Jets. This decent year this year, ended short. Still cheer for Canada in the Olympics. I'm still actually technically a Canadian citizen. Like, I haven't become a U.S. citizen yet. I have permanent residency and like all the way to basically becoming a citizen. I just haven't done that yet. I probably should, honestly. So I think it's always good to participate, especially in your local politics. I think are actually super important because you have a really big impact locally. Like, there might be like 1,000 people that vote, and you have like, you can actually move the needle with one vote locally. And then yeah, I mean, I do love Canada. Like, it's like kind of my identity in a way. So excited to be here.
You and Gary Tan, both Winnipeg born. I love that.
He's really from Winnipeg?
Born in Winnipeg. He's named after
What?
Fort Garry. He posted all this on X, and he's originally from Winnipeg. They moved when they were 10 to Bay Area.
No way. That's insane. I did not know this. How did I not know this?
Yeah, everyone's
This is
Canadian.
awesome.
Everyone's Canadian.
Yeah, that's the thing. It's like you think like there's like, I think there's like 2 people from this random town in Saskatchewan. It's a population of like 200 people. Like, they don't even have a Wikipedia page. I forget like who it was. I remember I had this realization once, and it's like these are like 2 of like the top 100 people in the world, and they're from just like one tiny town or whatever. Like, it's crazy how that happens.
I'm curious, like, what are your thoughts on, obviously with Banana Capital, like you've been very this media venture kind of like cohesion there. I'm curious, like, what are your thoughts on that now with like
acquired and Technology Bros podcast network and like Andreessen acquired Turpentine. Like there just seems to be so much activity in that space. Like how do you kind of feel like this is going to shake out? Is it just going to get too much attention on it and it'll like pull away? Like how do you think about that?
I mean, I think it's kind of the future of everything. Like if you think about, is somebody listening to this podcast, they probably identify it as like, oh, Evan's podcast. They don't identify it as like the CNN or like the CBC Tech podcast. Like it's just like, oh, it's like Evan podcast. I like Evan. He's a cool host. Even some of these bigger brand legacy kind of media names, it's usually the individuals that people kind of identify with. So there's almost, it's almost like unnecessary to have that corporate overhead and corporate burden of like laying over top of some of the media stuff. I think if you just, you talk about AI, it's like going to reduce the cost of creating content and the time of creating content. It's going to be easier and easier for individuals to do it. Like if you're really talented, why would you go work at a big corporation with like a ton of bureaucracy when you can just put out the stuff that you want? And you kind of see it with, I mean, I feel like YouTube probably first kind of played that out where you had like kids that were like 16 years old that were getting tens of millions of views and kind of like dominating the airwaves or whatever. And it's kind of evolved over time. But yeah, I think it's sort of the future of it. You see, like there will always be new brands, like the Tech Bros podcast, for example. Like, is it a brand? Is it some individuals? I mean, you identify with the hosts. They even the guests, like it's very guest driven. It's all individuals. So at the end of the day, I think that's just going to continue happening and proliferating. I mean, I don't know when this is going to go live, but within the past couple of weeks, Business Insider did some layoffs, TechCrunch did some layoffs. It's like an annual thing in media, and ultimately, I think a lot of people think that historical returns is kind of what drives future performance in venture. I mean, I think it's kind of true, but I think ultimately it's kind of like relevance and attention, and like the founders trust you and want to work with you. And if no one knows you exist and they kind of forget about you, they might not work with you, right? So it's kind of this like perpetual, like you look at maybe a venture fund that's done this really well, is A16Z. Like they're constantly criticized for not having good returns. That's like up for debate if that's actually true, but like that's kind of the debate. Is like they pay way too high prices. People will say like their returns aren't that good. They do outperform the S&P. I think it's like pretty good. They have a pretty good product depending on your check size and like what you're trying to slot in. But the reason people even talk about them is because they dominate like communications. They dominate media, PR. They've done that like so much better than anyone else. There's like a lot of venture funds that do really well and like no one knows they exist and they just kind of fade into irrelevance because founders don't take their money. And it's an interesting value prop to give a founder. I mean, it's not everything, but just saying like, hey, I can make 1,000 people care about what you're doing. Like I can make 10,000 or 100,000 people care about what you're doing. I can lend my trust and my social capital to you. I see it a lot with there'll be someone who maybe has a ton of followers on the internet. Like I think I have like 220 or 30,000 kind of across platforms. And there'll be people like I've literally seen founders spreadsheets where they like rank them based on how many followers the person has. And like that's how they prioritize who they have on the cap table. I do think that is not the correct way to fully do it. There's much more than that, but that it is something you should probably prioritize is distribution. There's an argument to be made that software is getting commoditized, like product is getting commoditized, and distribution is everything. I don't know if that's fully true, but I do think in a world that we're heading into, like distribution just continues to become more and more important. I mean, it's really important. You're probably seeing these tweets where people are like, "Oh, first time founders care about product, second time founders care about distribution,"
Hmm.
and kind of ties into all this. So I think it's not everything. I think you still have to like back the right founders, invest in the right themes and markets, and have the right entry points, and be able to actually help the companies, and know when to exit the position and stuff. But you're like rolling a massive boulder down a hill versus pushing it up a hill when you just have founders who just know you exist and are inbounding you. Like you have like just a great deal every day, like a new founder who's like, I sold my last company, I'm starting this new thing, I want to make room for you. Like, let's talk. That's hard to get. And when if you build up the right kind of like ecosystem, I mean, that's ultimately what some of these like very successful incumbent funds have done.
Mm.
Where when you start a company, maybe you work at like Shopify and you're like, I think I want to move to San Francisco. I think I want to start a startup. You'll probably think about YC. You'll probably apply to YC. Maybe you'll do something else, but like they kind of captured that mind share, right? Like YC could probably do literally nothing into perpetuity and just continue to milk what they have. And a lot of venture funds do that. I think the cool thing about YC is they're very good at not sitting on their heels, and they do kind of invest a lot. So yeah, I think ultimately at the end of the day, like it's super important. I think it's hard to understand just how important it is. I think it's one of those things where you maybe see people talk about it and you see it's kind of like it's kind of become a meme of this whole like influencer investor or like B2B influencers or like, investors that are like creators at the same time. And you may think, it's kind of overrated. And it is maybe in a sense overrated, but I think it's extremely powerful. And I think a lot of people don't fully kind of grasp kind of what it leads to.
How do you kind of think about like the medium, right? Like obviously you have a podcast, obviously you're very active on like Twitter X. Like how have you kind of thought about that? Or is it just like, hey, like I have fun creating this content or doing or like doing these things? Like how do you kind of think about like the medium? And obviously people have been doing different styles with like call-in shows and things like that. Like do you just do something that you purely enjoy and you just do it for a long time? How do you kind of think about that?
I do actually. Every single thing that I've done is just because I'm interested in it. I think I can be good at it because there's a stat that I saw that I think the average creator burns out after 7 years, which actually feels very long. Like I'm like,
Yes.
I thought it was more like a year. I say the average shelf life of like a content creator is 7 years, and it's like super hard to do things that you don't actually enjoy. So you might tell me, or I might come up with this hypothesis of like, oh, I think I need to, build all these products to add all the value to my portfolio companies and whatever. Like that's the thesis. But I like can't code anymore. Like I learned in middle school, like I don't know how to code. So I'm like learning how to code. Maybe I'm using some of these vibe coding tools and like trying to build stuff. I'm just like, God, let me just like make a funny tweet and get like 100,000 views. Like it's just so much easier for me. For me, I like talking to people and learning things, and that's a podcast. You just record it. So you maybe go from like, hey, let's just wing this conversation to I'm going to spend 5 hours researching exactly what I'm going to say and make sure that it's a really good conversation that people learn something from. But honestly, like if you're meeting someone, like let's say you're a young person and you're meeting like the CEO of a public company, you'd probably prepare for that conversation anyways and make sure you know what you're going to say because their time's super valuable. And then you, in that case specifically, like you build up a distribution channel that's valuable for them. Like you might actually flip it where the CEO is like, oh, I would love to come on. I actually listen to your podcast. I've learned so much from it. Like I've bought products that you mentioned, like or the founders that have come on, like I've used the products. Or one of my portfolio companies with the podcast, he kind of told me casually, he came on about 15 months ago, and I talked to him like, I mean, probably like every week at least we're texting, and we meet up maybe like five, maybe like three to five times a year, grab a beer or whatever when we're in the same city. And he's like, oh yeah, we hired like 10 people from that podcast episode we did with you. And I was like, what? You gotta tell me this stuff. Like that's like, you probably would have paid a recruiting firm like $1 million to do that. And like every VC's talking about how they add all this value, helping you recruit customers and or get customers, raise money and recruit people. And you just like you're hiring 10 people because of my episode. Like that's insane. So going back to what we talked about earlier is where like the value of some of the stuff is actually super hard to measure. But I think I just kind of thought about like what could be interesting, what's the hole in the market. So I think that's a super important thing when you're doing anything, whether you want to be an investor, you want to start a company or start anything, start like a nonprofit or just your career in general. It's kind of like a supply demand. Like what does the world need? Where's there like a hole in the market and a gap and an opportunity where if I do something that I'm super good at, that I actually care a lot about, and maybe I do it for free, but I can make a ton of money doing it. Like, I mean, that's probably the holy grail because you'll enjoy it. And then you're like, oh, wow, like I'm making more money from this than I did doing the other thing that I hated doing. Like, this is awesome. So you keep doing it and you try even harder and you get better at it. So yeah, that's been a lot of the thinking with this. So just wrote a lot for work, would write like longer research reports. So that's a lot of what I would do initially when I was on Twitter. I kind of grew up the class clown, just like pranking people, getting in trouble all the time. So just like making memes, it's just the same thing. Like it's just what's the funny unspoken truth that like everyone kind of knows and you just kind of say it. And then with the podcast, it was like having conversations. And I think too, you got to think a lot about on the content side, like, or just in general, like a lot of people talk about on the startup side, like what are technological waves that you can ride? Like, oh, I make an AI company. and it's just because it's AI, you get a lift or whatever. I think you probably need to be a little bit more tactical than that. But with content, it's like, okay, well, all these platforms are prioritizing video. I should just start recording video podcasts. I'll post the video. I'll chop them up on clips, and you just get a ton of attention and distribution online because of that. So I think you got to think about like what are some of the tailwinds just generally in whatever you're doing. Interested in it, can make money doing it. You think you can be consistent, and then just like general tailwinds are in your favor. That's like generally the way I've kind of thought about most of this stuff. And it's some of it's kind of lucky. Like I try different things. I started doing comedy shows. I've had a couple comedy shows. We're doing another one, and I don't know when this will come out, but we'll do one in the summer of 2025. That one was one afterwards. Like literally like 20% of the people who came texted me or emailed me afterwards. Like, this was the best event at New York Tech Week. And I was like, wow, that significantly overperformed what I was expecting. So anyways, yeah, it's like, I think you just got to be thinking about like what's new and unique. Like what does maybe the market want? I think that's always something to think about too.
I'm curious, like by doing the podcast, just content, media strategy in general, how is that kind of like, has that shifted, informed, changed how you invest, what you invest in? I'm curious if like one has had an impact on the other, or maybe it's just solidified however you think already.
I mean, I sort of accidentally became an influencer. So I was just trying to get a job in VC back in 2017 through 19. So I got my first job in 19. It took like 2 years. And I kind of became an influencer because I basically thought about it as just like a public journal. Like I was just tweeting things. It was like, hey, in 3 years we'll look back on this and I'll look smart. And it's like something I can point to because I don't have any money to actually angel invest. The advice everyone has is like, oh yeah, start angel investing, right? Like a check in your friend's company. And I was like, oh cool, that's like 2 years of salary for me. But like if I ever save that up in 12 years, I'll do that. I'll write one check. So one of the things I did was sort of this like fantasy VC portfolio where I just treated it like it was like fantasy football, fantasy sports. You're like, oh, I have this fake portfolio. It's like $1,000,000. Like here's what I invest in. I had no idea what I was doing, honestly. Like looking back, it's like, would make some changes, I guess. But it's helpful. I mean, everyone does that when you make your first couple investments. When you do anything, you look back and you kind of realize things you'd probably change or do differently. But it was good learning, and people just started following me and talking about it, and like people, and like actually a couple of the companies I met a lot of the founders that were in the portfolio after I tweeted about it. One of the founders, one of the companies, he randomly saw it and retweeted it. This was probably in like 2018, and was like, this is the best analysis of my company I've ever seen. And he like raised like quite a bit of money already. Like he'd raised like $10 million already. And I was like, wow, this is cool, like pretty awesome, but also like a little concerning that like no one else had done this, and mine wasn't that good. I thought so. I think like you just kind of started. I just kind of started to get like, and so like I just kind of started to get more founders that just wanted to work with me. Like they just kind of one guy who I'd met while I was trying to get a job in VC. One of the things I did was, I'd be in Michigan, I'd be kind of writing, and I would meet someone in LA or San Francisco who's like, they're a VC, and, they like follow you. I'd like DM them. I'd be like, oh, hey, I'll be in San Francisco next week if you want to get coffee. And then they'd say, yeah, they say yes. And I'd be like, oh shit, I guess I'm going to San Francisco next week. Right. And then you try to line up a couple more meetings to, make sure you're not burning all your vacation time and the $1,000 I had in my bank account on one coffee with someone. But yeah, one of the founders I ended up backing was one of the people that I just kind of did that with. And he was like, dude, I've just like seen what you've done over the past couple of years. Like, I don't know why I wouldn't want to work with you. Like he raised money from pretty much like he could kind of dictate what he did. And he's just like, hey, I'm doing this round. Like, I want to have you in. Like, what's your check size? Like, let's try to make it work. So the opportunity kind of flips to where, I talk to a lot of investors, and it's like they got an army of people that are just sending outbound and like trying to get in front of founders and convincing them to take the meetings. And, you do some of that too, but you kind of flips the dynamic where just you get a lot of inbound to look through. And it's kind of the opposite of what a lot of people are kind of dealing with. And then when you do the outbound, people have heard of you, like they already follow you, like they like you were already on their list of people to reach out to. So it's
Interesting.
like your conversion rate just goes way up when they kind of know. I mean, like people tell me like their conversion rate's like 5%, 2% on some of these cold emails to founders. I'm like, that's brutal. Like you got to do more top of top of funnel, like warming up the funnel, I guess.
Mm.
So yeah, like a lot of people will be like, oh, you just got to send more cold emails. You got to like hustle harder. For me, it's just right. Make the top of funnel warmer. Like make more people know that you exist. And like I think about it that way. It's like you like work hard to generate inbound and generate a way you can actually provide value for, excuse me, and generate a way you can provide value for founders without actually doing anything. Like you have a podcast and like the episode just gets like 10 views a day, 20 views a day. It's like hosting an event with the founder, like hosting a small little fireside chat every day, and they don't have to do anything. And just, you know, every other day someone applies because they listen to it and they're like an engineer. So I think just kind of the benefits of that can be like extremely, extremely valuable. I didn't really know this. It probably took me a while to just appreciate that I had kind of become an influencer. I kind of always thought it was kind of this dirty thing. Like I had that connotation coming from more of a finance background. I mean, I passed the first two levels of the CFA exam.
Mm-hmm.
You see people making fun of like TikTokers that do interesting financial things, and you're just like, yeah, I'm not like that. Like that's like I don't identify with that. So it's kind of this weird, I don't know, evolution I kind of went through where I was like, okay, well, I kind of became one, and there's a lot of people that are interested in what I'm doing, and like they trust me, and they're like they think that what I'm doing is entertaining or interesting, like they're learning from it. So yeah, you kind of built the trust of a lot of people, and then like some of them are potential customers for the companies that you're investing in. Some of them are people who want to get jobs. Like it's a 17-year-old kid or it's a 22-year-old kid graduating college, and like she really wants to work at a startup, and she doesn't even know what to do. And like she's just getting into this all. And she's like, oh, I like Turner's podcast. This company he invested in seems legit. Like Turner seems like a good investor. Yeah, I think there's just a lot of kind of really hard to measure ways. But it's all I think it all kind of comes back, and it's kind of like a flywheel where it's really hard. I mean, I'm assuming when you started your podcast, like no one listened. It was hard to
Yeah.
get people to come on.
Yeah.
Now I remember when you DM'd me, I was like, oh yeah, I feel like I've listened to one of your episodes before. Like I knew of you, the Canadian tech podcast guy, right? So like the flywheel
Yeah.
gets turning and it gets easier. So yeah, I think yeah, it's one of those things. It's just like super hard to get started and get going, but you kind of just hit escape velocity and like it just keeps getting easier and better. So I think then the hard part becomes like controlling it all, and like you wake up and you have 100 emails or whatever, and you're like, I got to spend an hour just sorting through this. Like you have the opposite problem that you had before, which is good. So I think I'm kind of in that point of this now where like my podcast got to the point where people want to start sponsoring it. Like it was like a friend who's just like, dude, let me sponsor your podcast. I know it's going to work. Like I know that the audience is who I want to hit. So I've kind of started doing some sponsorships now on the podcast where it's literally just people that I know where it's like, hey, I think I'm doing some sponsorships in the podcast. I'm like, cool, yeah, I'm in. Like, I want to do it. And I was like, okay, that was pretty easy. So, but if I tried to do that 2 years ago, like I remember when I was starting it, I was like, oh, it's kind of expensive. Like I was trying to do the math of like, could probably make this work, but man, it'd be kind of cool if I get some people to sponsor. And it's like hard. Like it just takes a ton of time to do all this stuff. So yeah, I think it's one of those things that just compounds, and it's changed the dynamic for sure around investing.
I'm curious with like how is that all that inbound kind of informed your decision making as an investor? Like obviously you're still doing outbound, obviously you have taste or like, hey, I'm interested in these types of things. How have you kind of like balanced that with like, okay, you're having all this inbound, you're having all this attention, there's good stuff coming to you. Is that what you're aiming for? Or like do you also have kind of like a thesis and all these things? Or like is it really just like, hey, amazing deal kind of came in, it doesn't matter if it's fintech, whatever stage, whatever.
Yeah, I think we all kind of have the same theses. Like everything is going to be AI. Like CPG sucks. Um, well, whatever. Like everyone has the same thoughts. Like no VC has any interesting insight. I think there's like a lot of people that'll do like data-driven investing too. Like they'll be like, oh, we get all these sources and like we try to reach out to them when they're going to start their company. I feel like everyone has that. There's like 10,000 funds that have, maybe there's like 1,000 funds that are all doing that. And again, it's like, cool. You've got random fund that says they have this. You also have like A16Z and Co2 and Sequoia and like Insight and like whatever. And even some of them invest like Series B, but they're still like, we would just love to meet and get to know you and build a relationship or whatever. So it's like all those people competing for the founder's time. Like that's just not where I compete. I just like don't think that it's really worth competing in that kind of arena. And so it's more so just like before there's any kind of like public signal. Like you want to meet, like, let's just say it's like the person who, like, they started a company, didn't work that well, they learned a lot, they worked at Shopify for 4 years, they were a PM or like a designer, they launched something, scaled it up, then they went and worked at a startup that they were like the second employee at Canada's fastest growing startup. I don't know what that is. And then they're like, and you meet them during that time, like, oh, she's legit. Like, if she ever started the company, like, I'm in. And you just like tell them that, and you just get to know them. And then when they start the company, you invest. And there's no data. Like, they might create the LLC, and they might register with the SEC after they raise money, and then the data-driven funds will flow in. They might start following. They might follow like Paul Graham on Twitter, and like that will trigger. Like, there's actually funds that'll look at who people are following, and do they seem likely to potentially start a company soon.
Interesting.
Did they leave? Did they leave Shopify and now they're working on stealth startup on LinkedIn? Like, this is like table stakes. Like, if you're a data-driven fund and you don't do that, I would probably be worried. But like, everyone does this stuff, so you got to figure out how do you get in front of people earlier. So, and that's when somebody's, they're like, I think one day I want to start a company. In 5 years, I want to start a startup. You're following Turner or listening to Evan's podcast for 5 years, and then when you're thinking about raising money, you think, oh, this Evan guy's like, I feel like he's like my older brother. Like, I just feel like I know him. And I want to bring him on. I want to talk to him every day. So I feel like that's more of the thesis, really, at the end of the day, in terms of like what the uniqueness is. Maybe
Yeah.
I probably invest in more consumer things than the average VC says you should invest in. I think a lot of it about like entry multiples, or like whether it's the valuation or just like the hype multiple. So like, I mean, that's if you think about like in private equity, if you just look at over time, like a lot of the returns ultimately come from leverage, which is like putting debt and paying down the debt, and like you got returns because you're able to lever the equity. A little bit of the returns come from operational improvements. A little bit of the returns come from growing the business. These are all like 10-20%, probably depending on the time period. And then if you look at lower middle market PE, which is essentially what we're doing, like if you're doing pre-seed and seed, like first, second round, which is usually when I invest, we're like low bottom of the market venture private equity. And a lot of the returns are actually come from like multiple arbitrage, and like ultimately like buying it 3 times or 4 times EBITDA and rolling up all the leverage, operational improvements revenue, and then selling it at 8 times revenue to a bigger fund. That's like double right there from just selling to a different PE firm. And that it kind of does that all the way up. And I mean, I think I don't specifically think this way in venture, but it's that same thing sort of plays out if you just think about like how you invest between rounds, like a pre-seed, seed, series A, series B. So like if you're just investing at pretty reasonable, fair, underhyped or like fairly priced, like, it's like it's pretty reasonable. There's no like, you have to really imagine that things are going to go very well in order to like have a flat round in the next round. I think there's just a lot of opportunity to just like back stuff where there's not like a lot of heat or hype yet. So I've tended to not do quite as much AI investing in the last couple of years. I invested in one. It was sort of they were doing like LLMs verticalized for healthcare. They got acquired in 2023, and made some money on it. But I think founder kind of knew like this is going to be like a capital raising game, and it's probably not the game that I want to play right now. So just kind of like took chips off the table, and it worked out pretty well for everyone. But yeah, I've been pretty slow in any of like the crazy AI stuff, and it's just like real product, it exists. So like the AI stuff that I have done, it's like I think a pretty down the fairway AI pre-seed or seed round right now is there's a really good video demo. There's a good demo, or more specifically video demo, that you can't even see. It's a controlled environment, and we're raising $4 million, $8 million, and we're closing by the end of the week, by the way. And the round's oversubscribed, and here's all these people that are in that are well known. And I mean, that's pretty down the fairway, pretty standard how it kind of plays out, at least in the US market. I don't know what it's like in Canada. And those are like very fairly priced rounds. Maybe they're a little bit of a stretch in some people's opinion. So the thing I think a lot about is just like, what is the ultimate like exit value of the business? Like at the end of the day, like you're trying to make money. Like a lot of people kind of a lot of people that are VCs, you got to do marketing. You got to make sure like the founders will choose you as a product. So you kind of talk more about warm and fuzzy, like, we support the founders, whatever. But like at the end of the day, it's an asset and you need to realize the asset. And the founders are the asset at the end of the day. Like you're backing people. They're going to create a business. Are the people going to create an asset? So you have to be able to say, like, is this thing going to do $1 billion in revenue? Like whether there's currently a product or a company, or if it's just like a team of one or a couple of people, is like, are they going to be able to build a company that'll do $1 billion in revenue? You be lazy with, you say a 10x, slap a 10x revenue multiple, it's a $10 billion company. Like if you invest at a true pre-seed or seed valuation, like that's kind of what people invest in early stage venture capital for. But when you say like, your entry point is 50 million, 100 million, like let's say you come in at, 10 million post and 100 million post, there's 10x return just going from 10 to 100. There's some dilution in there. I think a lot of people don't realize how drastic the dilution can be from the outside. Like you're gonna get diluted at least 50%.
Mm-hmm.
If you own 1% of the company, you're gonna own 0.5% by the time it exits, and oftentimes it's more, and oftentimes it's like significantly more. Sometimes that 1% is 0.2%. So like a lot of people might look at a high level like, oh, you invest in this company at 8 million posts and exit for $1 billion. You got like 120x return. Like you might have only gotten a 30, or you might have only gotten like a 50 because of dilution. So you really need to make sure that when you're like planning out the portfolio and just thinking about what can and can't go wrong, like you need to make sure you're not banking on just things continuing to be in this same current environment that we're in, whether it's a good or bad environment. So I mean, I think that's the beauty of deploying in a down market, is that it's probably going to be a better exit environment and you probably should be deploying more. I think the challenge is that there's less liquidity. Depending on what your capital base looks like, that might be impossible or more challenging. And usually when multiples are higher, there's more capital being deployed, which will incentivize you to invest more, which will push pricing up higher, which makes the returns go lower. In the short term, they're kind of going up. So if you're not really thinking about historical norms and what average prices look like over time, I think that can really trip you up. So yeah, that's sort of just generally how I'm thinking about that and how I kind of rationalize all that stuff. But it's super challenging, I think. Like, I don't know. I don't think anyone actually knows what's actually going to happen in the world. Like you just got to kind of find the good founders and give them money. Like, can you build a generational business? And that's kind of all that matters at the end of the day.
What have you really kind of learned about like investing, doing the podcast, having lots of conversations? Is there a stereotypical type of founder you're looking to invest in? People use these terms like spiky all the time, or they're very smart, or, things like that. Like, do you have things like that, or has your intuition just kind of built off having all these convos of maybe you're talking to someone when they're like 7 years into the journey and they're now very successful, but you can extrapolate backwards 7 years to like when they started potentially.
Yeah, I think there's definitely, and that's the thing. The funny thing, like we talked about how everyone has like the same thesis. Everyone's like investing in the same types of founders, right? Like, yeah, they're spiky, top 0.1% at, any one thing. I like the way Keith Boy, he's like, oh, if I meet someone who's top 0.1% in the world at one thing or two things, like, and it's instant check. Like, who doesn't do that, right? Like everyone says that they back the best founders. Like what a great pitch that would be if you're like, oh, I back like the worst. I back like the bottom 50% of people, or like I back lazy founders, or like like flat founders. Like there's no spikes, it's just flat or whatever. So yeah, I think like an underrated thing is probably like obsession and dedication and like consistency. So, and that's really, really hard to measure when you're just meeting someone who's starting a company and there's like a deck and there's not even a product built. So you probably just look for some sort of, and talking about being data driven, there's probably some unstructured data that you can kind of give out. So like one time I met a founder, the company didn't end up working, but I invested because she really like, didn't have the greatest pitch. She wasn't like super like pedigreed or whatever on paper, but she was sort of like, I was kind of like, and she wasn't good at doing this, but I was like pulling out some things she'd done throughout her life. Like she didn't describe it this way, but she basically started a tutoring business when she was in middle school to make money. Like her parents didn't have a lot of money, and she would go to the private school and like get parents to like have her tutor their kids when she was in high school, like middle school, high school, and like made money, sort of this like market arbitrage, right? It's like being in Canada with like a lower cost of a operation selling in the US. Like you have like a structurally lower cost structure. Like she was in like the not the best neighborhood, but would go to the market where people pay the highest price. And there's like a couple other examples of things like that she's shown, but that was like wasn't part of her pitch. So I don't know how many other investors would have necessarily picked that out. So I usually try to look for things like that. A lot of like dedication to the craft and like really caring about your customers and like building a good product. I mean, I think sometimes those things are harder to pick up on. I usually just ask people a lot about the customers and like a lot about the market. You just kind of tell like if somebody's bullshitting you. I feel like I'm sure we've all had these conversations with people where you kind of I feel like podcasts are notorious for this, where you're like listening to them talking like I think that person's full of shit. Like I don't buy any of this. So I feel like that's probably a part of it too. Is you just like keep asking them questions about stuff, and you kind of I think about it as like, am I learning something from them? Like, am I learning new things from them? I think the thing that's too it's really hard to measure, but like speed, velocity, like this is easier to measure and easier to gauge when they're a little bit further along. And then you do see a lot of VCs talk about this, of velocity to ship product and velocity to move and like signing deals and stuff. I try to meet people that maybe have worked with them in the past, just kind of try to suss that out, gauge that out. Really strong signal is like people that you've worked for in the past, like prior bosses you've had, if they've invested. So I mean that's probably a cheat code, honestly, if you're trying to raise money from me, is like get your boss, multiple prior bosses to invest. I mean, that was my strategy with my fund, is I got my prior two bosses to be the first and second check in the fund. And I feel like it's strong signal, because it's like people that have worked with you for 40 to 100 hours a week, just they're like, oh yeah, I think he's going to make me money, or she's going to make me money. I think that's another maybe thing I probably look for. I mean, I look at like public market and competition actually quite a bit, but not in the sense of like worrying about it, but just like seeing what it looks like. And I think there's different ways to kind of gauge. You can say there's no competition. That's good, right? Like it's like a open market. They'll be super easy to get customers. It also might mean that this is just like a shitty market. And like there's never been like it's never made sense to like build a tech company here. That could change. So they're maybe trying to like feel like you specifically ask. Like I think I ask a lot of times, like, what do you think the opportunity is here to do this? Like, why has no one done this before? Or like, why did like I've used this product in the past, like why do you know why they didn't work out? Or I feel like competition is, there's this whole Peter Thiel thing of like, competitions for losers, which I actually agree with. Like I do think you want to try to build a monopoly, but again, it's like venture 101. It's like I feel like your first day, you read 0 to 1 and you like know that that's a thing you should look for. So yeah, I think it's more of just like getting a sense of like how the market's maybe changing. Anyone can read a research report, but you probably get more insight from like a founder that's like has this thing mapped out in their head and like really understands like the vector of attack. I think a lot about just like getting your early first customers. Like I just kind of ask them how they think they'll get them, and I think it's another one of those things. Like, oh, we'll like run some Facebook ads, or like we'll hire a marketing person. Like those are bad answers. Like spoiler alert, I wouldn't say that. You need to basically know, like I want to give people money that just kind of already know what they're going to do, and they like convince me that it's going to work. Like that's sort of like the holy grail. Is this doesn't happen very often, but like give them 100 grand, and then they make a company that's worth $10 billion, and you just made $100 million from giving them the money, and you literally did nothing. I mean, that's what most VCs do. They don't do anything. They do like 0.001% of the work of building a company, and probably rounds closer to zero than that. And so you want to find people like you trust them. Like this person's going to go build a massive business, and like I want to be a part of it, and I want to be along for the ride. I think they're going to make me a bunch of money. Like that's ultimately the big question that I'm trying to answer. I also think a lot about, would I work for this person? Because that's going to be a really big challenge when you first get started. Is you got to convince some people to come work for you, and you can kind of suss out. I usually ask, who are some of the people, some of the early hires, because that's what everyone says when they're raising money, raising $2 million, want to hire an engineer, want to hire a designer, insert whatever they're hiring. You just see if they've hired anyone yet. And, maybe it could work out if it's just like, we're going to post on LinkedIn and see who comes in. Like, I mean, I've invested in companies where like that's been an okay strategy, but you really want to see that they've got people that are already lined up. I mean, I think when I think about just like some of the best founders I met, it's like, oh, they had somebody that was like helping them for free. It was like the CTO of a Series D stage startup that was like the side project was helping this guy on his new startup and then was going to quit and join as a co-founder or join as like the first engineer once they closed the round and he could start getting salary. But like he had a mortgage, he had kids, didn't really have enough. Like he kind of needed the money in order to make a jump over. Like that's a pretty reasonable reason to do it. Yeah, look for that kind of stuff. And I mean, you try the product. I think it's like a huge one. Literally, just use it. Just see what happens. Like, have the founders give you a demo. Try to use it. Like, that's a blocker a lot of the times. A lot of people are like ashamed to show the current state of it. Uh, and I usually just say like, I really don't care. Like, I know it's not built yet. I kind of want to see it. I want to try using it. Some people will introduce you to customers. So that's a really good way if you don't know a market very well, or if it's a new kind of market. I feel like I've learned quite a bit is when you talk to a customer, especially consumer businesses, you like try to talk to some of the users. There's like some psychological stuff going on of like, why do you specifically use this thing? That can be harder to do sometimes. It's easier in B2B than in consumer. And then I try to meet all the founders. For whatever reason, a lot of people don't actually meet the whole team. I think that's like the lowest hanging fruit. Is like there's been tons of times I haven't invested because I've like met the CTO or the co-founder, whether it's individually or together, and I'm just like, these people don't like each other, or like this isn't gonna work. You feel like this person is like not gonna be a good, like this person is probably not a good founder. And I mean that with like no real like negativity, but like really at the end of the day, like 0.1% of these all work out. And I would probably fall in that bucket too. Like if I was like, I'm gonna start a startup and we're gonna do $1 billion in revenue, I'd probably say, I don't know about that, Turner. Like maybe you're good at like podcasting and investing, but I don't know if you're going to be a good startup founder. So I think that's probably another one. But yeah, ultimately at the end of the day, you're just thinking like, will this work? Like if I give this person money, are they going to go out and take the steps necessary to start building a company? Like they're not going to get there right away. They're probably going to have to raise more money in like 2 years, right? Like that's just kind of how venture capital works. But like, are they going to be able to start hitting all those steps? Can they skip some steps? So that's something I learned from my old bosses at a Capital. They were one of like the first pre-seed funds. There's one called K9 Capital, it was before them, but they kind of helped build the category. And their big thing is skipping your seed round. So you raise your pre-seed and you go right to an A. You probably save about 10% on dilution. And so they just have, I mean, I learned a lot from them of just like backing pre anything founders. And I think that's awesome for the founders too. Save 10% on dilution. Like that's amazing. And good for the investors too. You got diluted 10% less. And I think in another way of just kind of summarizing it all, it's just you're looking for the problem that they're trying to solve at the end of the day, and like a lot of people will be attracted to that problem. Like a lot of and that's customers too. It's not just like people they're hiring, investors, but like customers are really what matters at the end of the day. Like, will people pay them for the product? Maybe not right away, depending on what it is, or like you'll be able to charge more for it in the future. There's always an interesting pitch of like, we have 10K ACVs today, but like there's a roadmap to get to 1 million per customer. I feel like you need to get to 1 million per customer on like a B2B product. Like that's a public company right there. You might take you 10 years to get there. Like Shopify, for example, started with people selling snowboards online. I don't know what the ACV was, but it probably wasn't very high, to like literally, I mean, I wouldn't be surprised if you got like Walmart using it, or like maybe Walmart's a little bit too big, but you probably get like regional retailers in Canada selling online with Shopify.
Yep.
And that's you're probably making $1 million or more from those customers. So yeah, I don't know. That's generally like the kind of process I like think about and run through. I mean, it's not perfect. You like forget to do some of these things sometimes, right? Like you're kind of like, oh shit, like I feel like I didn't really vet the go to market hard enough or whatever. So it's like you're always kind of refining, or like it's like a process. You usually do a couple calls over the course of a week or whatever, just to like try to like nail this down. And like sometimes you don't know what's important. Like sometimes I feel like a lot of people worry about the wrong things. Like people worry tons about like the go to market. Like you need to have the go to market perfectly nailed down. Honestly, like 90% of the time, what works is not the thing that was in the pitch deck. It's sort of like a function of how well do they kind of iterate on solving that problem. And they might, if they understand their customer really well, they'll know that Facebook ads do not work, but going to events and closing them at dinner after the event is actually the way to do it. And I mean, that might not have been in the pitch deck. Like
Yeah.
they just might not have known. So I think you have like some kind of like intensity around like how you iterate on solving some of these like initial problems and just figuring out what the customer needs at the end of the day. I mean, I think it's like the only thing that matters is like solving problems for customers.
I like to jump in my typical closing question. It's just, how do you deal with hard times? Building out a fun content strategy, all these things, like not easy things to do. Is there anything that kind of helps you out?
Honestly, like I feel like life is always pretty hard. Uh it's not exactly easy. I try to like get a lot of sleep. I don't know. I try to be like a 7 or 8 hour sleep a night sleep kind of guy. I think I only got 6 hours last night. So maybe it's not a good sign for this podcast. I I just like try to focus on like my family and like I really just kind of like cherish time with my especially with my kids because they just like grow up so fast. Like they were like babies a couple weeks ago and now they're like like ripping through elementary school. So I think a lot about just like how do you really kind of just soak and savor those moments. I feel like it's something that we don't talk about a lot. Like you don't hear a lot of people on podcasts like, oh, I love my family and like I like taking vacations and like I don't work that hard or whatever. Like no one says that.
Mm.
But I do enjoy just like trying to it's like this more like when I wake up in the morning, I usually play Uno with my youngest daughter. Like that's been the thing for the past couple months. I make him breakfast, I drop him off at school. I don't always go to bed at the earliest times because I'm making up for some of that stuff. You just like can't control for your kids like how long are they going to be here, how long are you going to be here, how long are you going to have them at this point. So that's actually something that I've really just like clung to over the past couple of years and like super surprising. Like I did not think before I had kids, like I did not think I would be a a family guy or whatever. Yeah, like I've been playing Minecraft with my kids like on the weekend. We actually played last night. So we got home. I got home at like 5:45, made them dinner, and they really wanted to play Minecraft. I'm just like, and my wife had to leave to do something. I'm like, you know what? Fuck it. We're playing Minecraft for half an hour, and then we're getting ready for bed. And we're gonna read some books, and it's just like, yeah, it's fun. Like it's if you've never played Minecraft before, it's like playing with Legos virtually, and then just like endless world, and it's just fun. Like my kids love it, and I just play it with them. So like you just kind of find those random things that you just can kind of look forward to. Like people glamorize like being a founder, being an investor. You're just like sending emails all day and just like talking on Zoom, or maybe you're going to events and like you're basically trying to convince people to give you money or to let you give them money. And that might be investing or recruiting. Like, hey, let me pay you 200 grand a year in exchange for you helping me work on this thing. But like, it's a lot less glamorous than people think it is. And so the fun stuff is like, hey, like I went to a water park with my kids, like the largest indoor water park in Michigan last weekend. That was actually fun. Like that's the stuff you kind of look forward to. So I don't know, like yeah, it's hard to know like what's the most important thing to focus on, but I think it's like the career stuff, the business stuff, like it's all big. But yeah, the stuff that will think yeah, I don't know, I don't even know what I'm saying. You can probably find a way to place to cut that chain.
I love it. Turner, this has been a lot of fun. I really appreciate the time. Thanks for coming on the pod. It means a lot. Thank you.
Yeah, it's a lot of fun. Thanks for having me.
Thank you, everyone, for listening to the podcast. The most important thing that you can do is follow the show on listening and viewing platforms, primarily Spotify, Apple Podcasts, if you use any other type of podcast player, YouTube, X, and more. This is one of the most meaningful things you can do is obviously sharing the podcast, but also just following the podcast on these platforms is the most important. That way we don't get lost in the algorithm of other social media platforms and you get the episodes straight to you automatically. Thank you for following, subscribing on these platforms.